You're listening to The Whole Truth, a Resources Rising Stars podcast.
Hello and welcome back to The Whole Truth podcast. I'm Paul Armstrong. I've just been talking with Ian Bamborough. He's the Managing Director of Saturn Metals. Saturn has a project with a difference. The company's in the process of developing a heap leach gold project right in the heart of WA's eastern goldfields. This territory is well known for conventional CIL plants and the like, but Ian tells us why they've opted for a heap leach project. The point of difference in this story is costs. It's all about low CapEx, low OpEx. The figures are astonishingly low. The project is based around a big open pit, shallow pit, 2.5 kilometres long. They're going to dig it up, put it on a heap leach, 10 million tonnes a year. The forecasts are to produce 120,000 ounces of gold a year. And the paybacks are absolutely fascinating because the CapEx is so low that the return on investment and the payback becomes a very short period of time. It's a project with a difference because of the cost base. The margins are absolutely stonking at anywhere near current gold prices, and the forecasts have been based on some pretty conservative numbers. There's nothing cutting edge or outstanding about this project from a mining or processing point of view. It's based on technology that's been around for decades, a shallow open pit, and low costs. I think you'll find this an interesting discussion about how to make money in the goldfields using a heap leach approach. Ian is a very solid performer. He's very thorough, as you'll see, and they're ticking the boxes on the countdown for a project that's going to make a lot of money for shareholders as they work their way through it. Ian, heap leach projects have got a bit of a bad reputation in Australia going back some years. Unkind souls would say they're called heap leaches because they're heaps of. Is that an unfair judgment?
Totally unfair, I think, yeah. I think I'll start off by, 46% of the world's gold is produced by heap leach. It's probably the dominant form. So I'm not sure my memory quite goes back to the 90s, but I've met people that, do.
So sadly, mine does.
Yeah, well, I probably was just arriving here, but I do sort of remember there was probably several heap leaches that were rushed. I think probably oxide material, which is full of a lot of clay, and I think it was probably used wrongly. I think in the old days people never used to agglomerate, which is basically just add a bit of cement to make little prills. So there's probably a heap of reasons, but forgive the pun. But I think the understanding of this particular extraction method, and it's not rocket science, it's everything that a conventional gold operation, we all crush rock. That's all this is, crushing rock. We all leach with cyanide. That's all this is, leaching with cyanide, and it's the same elution recovery circuit. So, yeah, I think probably unfairly.
Has the technology changed? I mean, in so many respects of mining and processing, the world has changed drastically, since the early 90s, and since some of these projects didn't go that well. Has the metallurgy and the reagents and the things that you use changed vastly over that time?
No, I just think it's probably it's just cyanide. Like any gold operation, it's crushing like any gold operation. So no, I think what's changed is probably what people have realised is what they put on a heap leach pad just has to be delivered consistently. A bit like a chef, following a recipe, baking a cake. You follow the recipe perfectly, you'll end up with a good result. Now, that said, there's probably good chefs and bad chefs, and obviously recruiting a few good chefs along the way will help. There's a little bit of, pièce de resistance you've got to pull in there, I think, particularly in that sort of agglomeration and stacking. But I think consistency of product, which is where a polyhill really comes into its strengths, in that it's geologically very consistent, the gold deportation is very consistent, and how we can stack our product to that heap pad is I think quite elegant.
Why do you think why have you gone for a heap leach as opposed to a conventional CIL? You make a very good point there, Ian, that nearly half the world's gold is produced through a heap leach operation. It's hardly cutting-edge technology. As you just said, nothing's really changed in the reagents and the like. Obviously, awareness, understanding of what makes it work has got better. Nothing like a bit of trial and error. But why would you go down the heap leach route rather than a conventional CIL route in the heart of the WA goldfields where CIL is standard bread and butter.
Yeah, it starts with the metallurgy, and in this particular deposit, it's just the cleanest, most efficient, simple metallurgy I've ever seen, including looking at several big operations kind of globally with Newmont Mining Corporation and working on some myself. So that's where we started. We kind of, if you want, you a lot of people will drill. Well, we've started from metallurgy and drilling at the same time and brought the two together. All the gold in our instance is just contained in quartz veins, which just means it's easily liberated. It's always grained, so it's easily dissolved. And we've just seen some spectacular heap leach recovery tests. And the basic part of it is we can get excellent recovery at a much lower cost. And all we have to do really is crush to get these excellent recovery figures instead of in a conventional mill CIL to get, the numbers we're sort of talking about. It's crush, grind the rock, and in that grinding process, you add on a big mill, a big power station to run the big mill, a tailings dam. So all those things kind of get backed off, both capital cost and operating cost. And that's where Apollo Hill really starts to sing.
So you talk about those numbers and those costs, Ian. Take us through what you know and you can talk about in terms of the cost of this project, CapEx, all-in sustaining costs.
Yeah, look, I can do it in a couple of ways, I suppose. The big kicker for me is if we look at our all-in sustaining cost in our study, we came out about $24 a tonne, and we do that because we have a processing cost of about $9.85.
Can you put that in the currency of what it will cost you per ounce?
Yeah, about 1,857 an ounce, so let's say 1,850 Australian. But the kicker on the dollars per tonne thing is it's that margin that we're going to get from dollars per tonne margin times the sheer volume of what we're going to process here. This is a big mine and a big operation, so I'll take you through a bit of maths if I can get this right. So let's pick a gold price, well below where we are today, randomly about say 3,700, which is what, $1,000 below today.
Aussie, yeah, 3,700 Aussie, yes.
Yeah, let's take that. That would give us about $60 a tonne in terms of revenue, which is okay. After recovery, we see about $48 a tonne. So that's what you're going to get coming off the heap. $48 tonne minus 24, that's about half, leaves us with $24 a tonne margin, which is okay. Again, you might look at some of the higher grade, underground gold mines. They've got a much higher cost base. They're underground. They've got to put a lot of development in. They've got to run a big mill, that kind of thing. So everything starts to even out. The kicker for Apollo Hill is times 10 million tonnes per annum. Now, 10 million tonnes per annum at times 24 is 240 million, free cash flow per annum. And in terms of our CapEx cost on the operation, which in our last study, our PEA was about 304 million, that is incredible payback, but also, meaningful, strategic sized animal free cash.
When you say incredible payback, so what sort of CapEx would you be talking to get to pour your first gold?
That pre-development CapEx in the study was 304 million. So we're looking at less than maybe 1.6 years. Today's gold price, it's probably down towards about a year.
So given that you've got such elaborate numbers and you've been into this in such detail, you're still doing the PFS due for completion later this year? Absolutely,
yeah. So, and I think it's what we're going to remind people is this is a big project. This pit's probably not too dissimilar to the last cutback on the super pit. So we're going to do everything properly, and we're working through that process, be it drilling.
How big will, let's go through that. How big will the pit be?
About 2.5 kilometres long. I think we've got a really nice slide in one of our presentations where we juxtapose it next to the Perth skyline. And
it's shallow?
Yeah, shallow, probably about 300 metres deep, all from surface. There's no pre-strip on this. the thing sticks out the ground. You know, as soon as that shovel goes in, you're straight into ore, and it's straight onto.
So what is the resource as it stands now, Ian?
2.03 million ounces, and we have.
At what sort of grade?
It's 0.53 grams per tonne.
In the measured and indicated category?
Measured and indicated is pretty much about 0.54, the same. So, you know, I guess that's the way this is approached is bulk mining. We've deliberately given that gold department, we just try and take as much as we possibly can. That brings in economies of scale, big equipment, efficiencies in mining, and just really keep that cost structure low. And I think it's important, you know, particularly in this sort of labour market where we want to keep things as simple as possible. And that really starts to work for this deposit. Is there's no complexities in the mining.
So what sort of mine life do you have at 10 million tonnes in a year?
10 years, 10 million tonnes for 10 years, producing about 122,000 ounces per annum. And that's based on our last resource, you know, pre the recent one. And we still have a drill program going on now for a sort of second resource upgrade this year.
Is there much scope to grow that global resource figure?
Absolutely, yeah. I think this deposit, let's put it this way. When we applied for our mining lease, we put a mining lease in which is 12,000 hectares. And at the moment in the studies, I can see, you know, obviously there's one big heap leach pad there. We left room for 3 in that leach pad. And I think that's my vision of where this deposit's going.
So presumably you've sterilised those areas?
Yeah, we picked some good areas for sterilise is not the right word. We've had a drill and we've kind of picked the lesser areas of prospective geology, but we still have 1,000 square kilometres of, you know, really good ground around that deposit.
So what happens next? What's the news flow over the next 6 months as you see it?
Well, we're in the middle of our biggest drill program ever of about 60,000 metres. We're about halfway through that. I think you're going to see some continuing very strong results come out, as we've seen in the last couple of months. That will give us a new resource upgrade July, as mentioned. I think that will be the basis of our inaugural, you know, maiden reserve which we'll publish in our pre-feasibility study. So you're going to see that all this calendar year. I think Apollo Hill can chuck out some spectacular intersections, and we're really starting to understand the intricacies of this deposit. And that, you know, I always say to people, the grader's choice here, but it, you know, there's some beautiful zones within the deposit as well. Metallurgical data, I think the biggest kicks and kind of volume trades we've had on any particular day have been our metallurgical breakthroughs. We're still pushing the boundaries there on the deposit, and I think all that bodes well for our studies. Air core drilling, we'll see about maybe 17,000 metres of air core done into that regional prospective area this year. I think there's a couple of prospects starting to come together nicely. And I don't think it's impossible, given the terrain we're in. We could see, you know, we're surrounded by multi-million ounce deposits here, and yeah, some fantastic geology, and that pattern regionally is really starting to come together. Is
it possible to accelerate this though? I mean, at the moment your timetable is what, first gold FY28?
Yeah, for the big project, yeah. For the full scale project.
So can you bring forward some or all of that?
Yeah, look, the company's been working very hard on, I suppose, what's been termed a kind of pilot plant bulk sample. Bit of a misnomer in that our pilot plant bulk sample's like 1 million tonnes, you know, million tonnes per annum kind of operation, and there's quite a few mill CILs.
That's what they do in a year. That's what they do in a year.
Yep. Yeah. So it's now that, you know, you stand on something like that, it's quite overwhelming in itself as a heap. So it's no small effort, but we're working really hard on that sort of lower capital entry option. To that end, we've put permits in for mine approvals, the works program for the plant, native vegetation clearing permits, and we wouldn't have done that if we didn't think this thing was starting to have some legs. I mean, what was originally designed as kind of scaled up test work for the the project is obviously becoming a lot more interesting now in terms of the higher gold price environment. And I think more recently we've made some great breakthroughs with, this thing's been done as a kind of contract setup to keep the capital down.
Right.
And I think the recent change in the kind of contracting environment with perhaps changes in lithium and nickel and things, there's kind of equipment available now that there wasn't previously. And it's starting to become very interesting.
So you could bring forward some of that cash flow, or is there scope?
Yes, I think there is. And I think what we'd like to do, subject to this thing fitting into the big operation, is use it as that first initial step into production and then scale things up. And it's been about finding the right sort of partnerships to do that with in terms of contract crushing. And what started as a kind of break-even test work concept today looks very interesting given the higher gold price. And
what sort of feedback do you get from the market here? I mean, you're selling a heap leach project. You've got a timetable there that's still a couple of years out, although it's obviously scope to bring it forward, which I suspect the market would love. You got some brokers' notes out that are pretty bullish, I see. Big price targets compared to today's. Is the market feedback encouraging?
I think one of the first things is if you look at our register for quite an early stage sort of explorer developer, we're highly institutionalised already. I think there's about 57, could even be a bit more after the recent raise. We've seen some new support come into the company, and that's long technical institutions where we're really starting to tick some of the boxes. I think the market's starting to understand that we're onto something a bit special here, and this is a strategic size asset, and in anyone's kind of portfolio, and I think for ourselves, this is I've always said it, and a few people have sort of looked at me a bit sideways. This is akin to that kind of Capricorn Metals moment where this is that kind of asset.
That's a lovely parallel. That'd warm shareholders' hearts.
Yeah, no, I firmly believe it, and I've defended that to a few people and had them walk away going, "Oh yeah." So
right,
it is. It's an amazing asset, and I think so. Yes, and obviously I'm a strong believer myself.
But it's a relatively simple project. That's the bottom line. Big simple pit in the heart of WA's eastern goldfields. A heap leach operation using an approach and technology that's been around for decades, as you say, albeit with a bit of the benefit of learning along the way.
Yeah,
there's nothing particularly complex about this. Well, how's the approvals process? Where does that stand?
Well, that, as I say, with a pilot project going in, that's given us a real good head start on things. So that mining approval's gone in for that early stage. I think that brings the department along with us. It brings our other stakeholders along with us, such as traditional owners, environmental department. We've been doing a tremendous amount of work. I think our bore field development, because of the pilot project, has brought on our water approvals and 5C and 3H licenses and things. So if I'd say in a really good position. We've been thinking about this a long way forward for a long time.
Ian, thanks very much for your time. It's obviously a fascinating project, a little bit of difference here from your normal CIL gold project, but the margins, your low cost, CapEx and OpEx, and the margins are obviously fantastic. Yeah, and it doesn't seem to be that's anything too cutting edge about it. It's relatively routine as you tick the boxes.
Yeah, it is, and I think we've just been ticking. This thing's always got better, and I think it's just about to have its moment.
Great, thanks for your time.
Thank you very much, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.